Welcome and hello and welcome, guys. Welcome and hello and welcome. It is Un Poco Mas. Here I am, Sean Vaughn. Here I am in all my glory. What are you, a chubby chaser? No, guys, welcome and hello and welcome. Thanks for joining me. I've just been super tied up with work and life. It's not, people always go, oh my God, the stock dropped. So, you don't want to do videos. That's exactly when I want to do videos because realistically, I always find it kind of funny, people on here, I won't mention any names. My one resident bear who kind of hates SoFi here, rhymes with Rando, or Rambo or whatever. But what's up, user? Not a lurker, the great not a lurker, encouraging you to sub and like. I would just stay neutral on that. I don't know. I'd sit on the sideline, kind of maybe take a feeler position and evaluate things. And if my picks keep being horrible, definitely don't like and sub. And then if my picks are good, definitely also don't like and sub. Whatever you do, just don't like and sub. Because I hate you. But anyway, guys, welcome and hello and welcome. It's Un Poco Mas. They call me cornbread. I'm moisto. I crumble under pressure. They call me the tugboat because I'm short in stature, pull more than my own weight, and I'm rarely far from my own port. They call me Stubby Cohiba due to an unfortunate manscaping accident I had outside of Miami, Florida. A message for everybody, guys. Do not manscape with a spinning stainless steel blade, 30,000 RPMs, or you too could end up with the nickname Stubby Cohiba. They call me DJ Patchy Drizzle. They call me MCI Al Dente. If you want to use my Christian name, of course it is Tabasco Rojas. Um, I love those idiotic nicknames, and I apologize for saying them every time. Anyway, guys, I just kind of went nuts. I broke my own rules. I hate to do that, but SoFi is now my number one holding. SoFi passed Microsoft. Now they've both fallen off quite a bit. But I've just been accumulating SoFi very, very heavily since below the $5 range. And I hadn't bought heavily in a while. I tried to flip down a few times, but I hadn't made a major buy. And that changed because I'd taken when SoFi introduced their options, I was just like, this isn't for me. And I completed sort of my $10,000 challenge. I ended up cashing out, a few months early just because I wanted to preserve all those gains and the market just wasn't looking that solid to me. And I didn't want to, continue to let my capital erode just for the sake of some experiment when I had, like 40x my money. So, and that was just a lucky run on all those SMCI and CRISPR calls. Just made an absurd fortune. That was just one account, but um, you got to preserve your capital. You got to take profits. I say that over and over. And I'm somebody who likes to preach diversification. Most of my assets are in real estate, apartments, student housing, projects like that. But in terms of my stocks, I'm also pretty well diversified, but the concentration at the top got a lot greater just as Microsoft went up over the years. And a stock like SoFi that I was buying into, at 5, thinking it might go to 10 or 12, then all of a sudden the stock runs up to 32. Um, Here's the thing, guys. I just made, I'm not going to say exactly, but it was, I bought over, 10,000 more shares. Kind of went all in. I'm over allocated to SoFi. I have way more of my stock portfolio in SoFi than probably is prudent, but there are several reasons I'm willing to sort of take that leap of faith with the stock. And it was ended up down 1.45. You kind of see this bull pattern. It's not typical. You see the upgrade from JP Morgan. Oh, God, I thought I was on mute. You see this upgrade from JP Morgan to $31 in a buy, which is not particularly surprising considering JP Morgan is the number one shareholder in SoFi, but you also see some other filings coming in. I noticed Oppenheimer increased their position by 50% and their average cost is a little bit over $20. You sort of see that magnet come on. Did you guys notice when SoFi was running up, kind of broke out through that $20 resistance area and then sort of made a move quickly up toward 30 and it tested 30, actually went above 30, I think 5 times. So there was plenty of buyers coming in at 30, but then you started hearing that 20 number. Kramer said it's going to go higher. It's resting to go higher from like 28 or 29. So, and then just a few weeks later, he was saying 20, and you started hearing everybody, Bank of America, and then, Goldman downgraded from I think Goldman was at 30 or something and 28, then 24. So, they were kind of all over the place with the stock. And then the usual suspects, of course, will always be there, Midwest Values, Morgan Fudley, KBW, just bashing the stock every chance they get. But why did I feel very comfortable buying a lot more shares today down near 21? I don't know exactly where I bought the shares, but it was way down here. It was after this sort of wasn't after this peak, but it was like right in this area somewhere, probably around 21.20, 20 between 21.15 and 21.20. I think I got an incredible buy. I have never seen growth this durable with no down quarters in up and down markets, in high and low rate environments. And I'll just put my investment thesis out there. Okay. These major analysts and those who build the models, they're all modeling SoFi to have a CAGR for 5 years, starting like last year, somewhere between 18 and 20. Okay, if you change that assumption from 18 to 30, what does that actually do to the value of the company? Well, it takes the compounding from like 2.26 to 3.7, or it makes the company 62% more valuable. That's the power of compounding. And SoFi is coming out and telling you the next 3 years are going to be 30%. The previous year was way over 30%. So I just don't understand how the growth in year 4 and 5 to make these analyst models work. The models are broken, guys, and they're broken intentionally. This is what happens with these stocks. I mean, you have market makers don't like to take chances. They don't like to speculate early. They don't like to hold a stock for years like SoFi because of the opportunity cost, and they can make money so many different ways with their cash. I don't like to do it either, but I can't time the market and I don't know what the market's going to do. So when I see something that's a compelling value, I'm willing to bottom feed, accumulate, and hold those shares for many, many years. In fact, forever. Like, well, when are you going to sell SoFi? I'm like, I tell people I might sell at 100, but I have no plan to sell because, in my opinion, JP Morgan knows the same thing I know, which is that this stock is inevitable. The growth is inevitable. The members are inevitable. All the trends that you want to see are in this report. Now, listen, even if you say, okay, the CAGR assumption goes from 18 to like 23 or 18 to 25, the fair value estimate would still move, 35%, 30%. I saw a Simply Wall Street article where they're like, SoFi's crushing it, but the fair value is 14%. And they're like, it requires perfect execution to get to that $14 number. I was like, you guys are on crack. Do you understand what a SPAC is? A SPAC is a bet. A SPAC is a gamble. You have no idea what you're getting with that $10 bet you make. And a company like SoFi that has performed, look at where their sales were when they went public versus today. Look at the quality of the growth, the durability of the growth. Look at what's happening with the margins. S&P 500 inclusion is going to come, and that's the real catalyst, because that's what's going to take institutional ownership from this, 54% level to 65, 70% level. And you're still going to have insiders owning the 15% and printing more shares and just, jerking each other off with our money like they're so wont to do. You notice the recovery at the end. You notice the accumulation. They all want to buy at 20. Problem is, you don't want to sell at 20. You don't even want to sell here. Hopefully you want to buy here. Hopefully you guys are punishing the market makers for their incessant, price fixing and dumping and shorting and churning. They all wanted you to, why was there, look at the narratives that happen around the stock. When the stock is running up through 30, everybody's cheerleading the stock. Everybody's like, oh, it's going to go higher. It's going to keep running. That's what they're telling retail, because they want you to buy as it runs through 30. And they want you to sell now after you just lost a third of your money. I mean, look at what's happened. Robinhood is falling apart. People realize, I know their performance has been incredible. Okay. And I don't want to take anything away from that, soul patch hero. Pert Plus, man. But I said it a million times. I'd rather have SoFi savers over Robinhood traders. Crypto market falls apart, margin calls, that company can fall apart fast. SoFi can't fall apart because SoFi has durable competitive advantages that don't go away in down markets. Look at the trends. Massive growth in deposits. SoFi grew deposits, what, billions of dollars. I don't know what it was, $4 billion. I went over, and I have to apologize to that, handsome young guy with the, carefully coiffed 5 o'clock shadows down in my comments. I don't know if he's here. I see Jay Ajayi, great fantasy running back Jay Ajayi is here. I wish Galileo, tech was up though. I mean, it should do something interesting. What you noticed with tech was accounts were down, revenues were up, margins were up. So that's exactly what you want to see. They're getting those bigger customers. The shift is starting to happen. And here's the other thing. Everybody wants to see that mix of 50% fee-based, financial services, high margin type revenue. And it's not quite there yet. Well, listen, they're the victim of incredibly strong growth on the loan side. Loan originations are staggering, like 10.5 billion just in a quarter. And the loan business is a good business. It's a profitable business. And that has a lot to do with those deposits. You're saving 1.8% cost of capital versus utilizing a warehouse facility or some other similar source of third-party funding. That's the magic here. They pay people 3 point some percent or 0.5% or whatever the case may be on their deposits, and they lend it out at 16%, 20%, 25%. It's a great business. It's not as sexy as fee-based stuff. It's not as sexy as tech. It's not as sexy as AI. It's just a nuts and bolts business, but it provides a backstop. It provides a certainty that SoFi is going to be there through the dark days, through the bad weather. It makes me willing to over allocate to this stock, as does my confidence in management. You look at management, and then with the lending, you look at the credit quality, how well it's holding up. You look at the growth of net interest income. You look at how the net interest margins are holding up. You look at how charge-offs defaults continue to come down and just be miles under the assumptions that management made. This business is absolutely crushing it. And the reason I wanted to apologize to that beautiful, bald, young, handsome viewer I have is because I think he's right. As more I've digested this ER, it's not a B plus ER. It's either an A or an A minus. It's either an A or an A minus. And I just don't think there's any doubt. Read these articles, guys. SoFi upgraded to overweight at JP Morgan on undeniable momentum. Our old buddy, Reginald Smith, this is the type of entry point we've been waiting for. Momentum is in the business is undeniable as SoFi continues to add new members and deposits at a record pace, while other fintechs report deposit outflows or stagnant member growth. The investment in marketing in 2025 and first half 2026 set the stage for continued premium customer acquisition and engagement for the foreseeable future. 40 billion loan portfolio and further upside from its tech platform and rapidly expanding financial services offering merit a premium valuation for the stock. This is not just like growth for a bank. This is nothing like that. You guys know the Asian investor, strong revaluation catalysts in 2026. So SoFi Technologies delivered record customer acquisition. We know that. Record loan originations up 46% year over year. Guidance for 2026 implies 30% adjusted net revenue growth and 52% adjusted EBITDA growth. I don't care if you think it's a boring business. Those numbers aren't boring. Those numbers don't lie. How can you be modeling for 18% CAGR when it's like 35% last year, which is the first year of year 5? It's going to be over 30 again this year. And SoFi's telling you it's going to be over 30, and they're always sandbagging for the next 3 years. Yet these dumpskis, these phony, buy-side bullshitters, sell-side suckers, I guess. No, they're sell-side analysts, but I mean, they're the same guys where, they're selling $27.50 the offering their institutional clients the Goldmans of the world, but they're never afraid to sell a shitty deal. That wasn't a shitty deal. I mean, I think the stock's worth about 37 bucks because I think their CAGR is actually going to start to accelerate. I think you're just getting the tip of the iceberg with all the businesses SoFi is going to be in over the next 5 years. I think they're going to expand everything they're doing with small business. I think the IPOs, the private equity stuff, it's just the tip of the iceberg. SoFi is going to offer an incredible, unmatched product suite, value, stability, value proposition, durable competitive advantage to the ultra premium customer, the ultra premium, upwardly mobile, highly educated customer. I used to say this all the time. The secret sauce is not, some magic of what they do. These products are able, the secret sauce is how they do it. So customers want it. And the very best customers are willing to trust SoFi as their financial forever home. And we're able to monetize and capitalize on these, upwardly mobile, highly educated, future high net worth individuals. You build the relationship, you give them a better deal, you give them better service. People love SoFi. That's the key. Nobody wants to trust Robinhood as their financial home, their main bank. Long hair and fancy shoes. Give me a break. You trust Noto because the guy is rock solid. Look at the company's financials. Look at their balance sheet. Look at how they treat the reserve. The reserve requirements for them are a joke. They're not a guideline. Ultra conservative. And then they're still expanding their margins. If you look at quarter on quarter, the last couple of quarters, they had to add almost 100 million, like 90 million in revenue per quarter to add 30 million to the bottom line. So about a third of the additional, revenue, the marginal revenue got to the bottom line. Now, I was the one who said when I first looked at this ER, well, top line growth is actually kind of decelerating in terms of quarter on quarter. It's 90 million. This quarter, they only added whatever it was, 50, 55 million. I'm not going back to any numbers or anything, but just doing this all off the top of my head. But they actually added 33 or something million to the bottom line on only 50 some in additional marginal revenue. Think about it. As SoFi adds this million members, all this revenue, what do they actually have to add in terms of their marginal costs? A few more customer service representatives, a little more server space. This company is built to scale as a free cash flow machine. And JP Morgan and Goldman Sachs and everyone else in this business knows that SoFi is inevitable. They know that SoFi is going to be a big player. They know that SoFi is going to be that top 10 financial institution. And a lot of people are like, well, JP Morgan, that's just normal accumulation over time. No, it isn't. They just bought all these shares right now, the last couple of quarters. They went from almost no shares to 65 million shares practically overnight. That is not normal to just come in and buy, 6% or whatever of a smaller competitor. It's like, well, that's just, indexing. It's not. It's absolutely not. It's them making an individual decision on this company that this company is going to be a future winner. And they know this space better than anyone. Clap my dog. This is what you want. You guys want the disconnection between people are like, aren't you upset? Don't you feel like a loser? No. This is exactly what you want. Take the ego out of it. You're worth people have this mentality where they're like, well, we had a great ER and the prices they're attacking the stock and the price is going down. That's an injustice. I've been wronged. It deserves to go up. Deserves got nothing to do with it. That's not how life works. We can't drive the bus. Don't feel sorry for yourself. Plan accordingly. They always attack this thing on earnings. You have to have dry powder. Now, should you buy now? Should you buy under 20? I never thought the stock was going to go much under 25. So my credibility is a big pile of steaming dog shit, more ways than one. All kinds of issues I got going. But talk to the people who know. Yeah, Bank of America dumped their put position on SoFi. I know that. Yeah, JP Morgan is full long. I mean, JP Morgan is full long. I can tell you we can look at who's actually shorting SoFi, Bobby Joe. Yeah, Bank of America, the filing today, they got out of their short position completely. UBS, Carlson Capital increased their put from 18. UBS had a put on from 1065. Great play. They just reduced that position by 42%. Couple others completely sold out of their short position. Hudson Bay, a new short from 2364. Let's see. Tudor, another big one from these are some older filings. These are from last quarter on the way up. So not exactly brilliant. I don't know if they can cover here, but I don't know, guys. This is what I look for is, like I said, market makers, they don't want to buy in early. They don't want to take the chance. They don't want to go, oh, we could buy any one of 10 stocks and maybe two will go way up and the other eight will be losers. They wait to see who is definitely a winner. And once Goldman and JP Morgan and Oppenheimer and the rest of these players, BlackRock and all the others, once they decide, okay, SoFi is a sure winner, but there's way too many, tiny wing retail investors in the stock, we have to crash the stock. We're going to crash the stock. We're going to get these guys out. We're going to get their shares as cheap as possible. And people might say, well, you're just completely delusional. It's not going down because market makers want to accumulate shares cheap. It's going down because what? Because the ER was so good, because the growth is so consistent, because the margins are going up across the entire business, because tech is actually starting to fire, because the revenue mix is trending exactly the way, you'd want it to get a higher multiple, to get a re-rating. I mean, explain it to me. Explain the price action. You can't. Because it doesn't matter. If you have conviction that this stock is worth 30 today or 35 today, or you have conviction that this stock is going to go over 40 once the S&P 500 inclusion comes. And I think people are like, well, S&P 500 is in question because of the price action. I totally disagree. I think S&P 500 inclusion is more likely than ever after this ER, because you simply do not see companies grow this consistently the entire time they're public. Every company has off years, off quarters. They had the one, big write down with Technesis. I'll give you that. But I just can't think of another company in this space. I mean, you guys saw what happened to PayPal. I mean, everybody was, teabagging Alex Chris, like that guy was the second coming of, Jamie Dimon, whatever. He's more like Lester Diamond. You the country club golf hustler. She's my wife. You know that. Jay Ajayi doesn't like Walmart's PE. Let's see. I think it will go 35 plus this year too. Nafa Feppo, clap my dog. Don't sue me, bro. What's going on? The great Carl Seamark mattresses. Got a pillow top for you. Carl Seamark. Well, it's tough to watch. It is and it isn't. I mean, yes, it is painful for me to see my, paper losses because I got probably more shares than all you douchebags combined. But I'm staying strong, guys. Biceps looking flabby. That's the key with fat man arms. Get a little bit of muscle. There's a lot of fat down here. Actually, there is no fat left. I've been doing a lot of fat man push-ups. Anyway, let me what else was I going to talk about? I can't really remember. Yeah, guys, if you start reading these numbers, you'll see that the lending growth is kind of masking and minimizing the growth on the tech side and the growth on the fintech side and the growth on the fee-based side. But that's not a bad thing. The fact that a very profitable business like lending is growing extremely rapidly is good. It's great. It provides stability. It provides capital. People are like, when is the next dilution? Guys, give Noto a chance to see how he's going to deploy that capital. It's only been a couple of months. People are like, oh my God, he stabbed us in the back. Okay, if he steals it all and goes to a place with no extradition, okay, he stabbed you in the back. But if he deploys the capital intelligently to maximize, shareholder value and return on that capital, which I'm very sure he's going to do. Anthony Noto has forgotten more than we'll ever know about how these businesses work. The guy's a second CFO. He's a financial genius. So I said, this company's built to scale. I know all companies are kind of built to scale in the sense that you only need one executive team, but they really built this thing to scale. And in different ways, in different directions that I think, again, we don't even really understand yet. I think they're just building the base, building the foundation, and there's going to be so many tentacles, so many arms. And a lot of people are like, well, it's, that one accounting guy with the high Dracula hairline, has like 200,000 subscribers. Like, Robinhood is the best and SoFi is garbage because SoFi's business is smoke and mirrors. It's like, do you not understand how lending accounting works, my friend? It's a lot of hot air, a lot of bluster. Bunch of bullshit. This to me is like the buy of the century. They're not getting paid for the growth. They're not getting paid for the business model. You see cross-selling working, customer acquisition working. The stock-based compensation is becoming a drop in the bucket because revenue is increasing so quickly. I mean, look at what happens to price to sales with a CAGR over 30. How much that changes every single year. And then look at where they got the margins up over 17% already. At these, most companies growing this fast are doing it at the expense of profit, at the expense of margin. They're just, going into more debt, burning more cash, grow, grow, grow. SoFi is responsible, sustainable growth. And that has allowed them to be super, super selective. And I'm super, super serial. I read this ER as an A. My viewer was right. I was wrong. Okay? Because when I was digesting the earnings report, I was half asleep. I heard it at, 3 in the morning, my time or whatever, and then, went back to sleep. And so I was kind of going over everything in my head. I hadn't had a chance to read it all. I hadn't had a chance to read all the commentary, go back and listen to management. In the last couple of days, I've had that opportunity, and I think this business is absolutely bulletproof. I think it's inevitable. I think it's an avalanche rolling downhill that is just gathering, it's gathering deposits, it's gathering members as it goes, and it's just inevitable as gravity. Surface water analogy. The surface water analogy I used is incredibly important. All these other companies that are blazing new trails and inventing new things, all you want is fresh water. Take the huge, beautiful, crystal clear mountain lake right in front of you, where you can just get all the customers, all the water, all the profits off the surface because you've built a better business model that people like better than getting screwed and bent over by the mega banks and regional bank and the credit union. Everybody's like, oh, just join a credit union. Fuck you guys. Join SoFi. Nafafepo. Join SoFi, buy SoFi, Nafafepo, don't sue me, bro. Nafafepo. Not financial advice, for entertainment purposes only. So, I mean, I know the bears can point to price action. And it, again, that's something I always found super strange about how people have this sort of vicarious accomplishment. Like if you're bearish SoFi and then, for instance, you disappear from the entire run from 12 to 32. And then when the stock price starts going down, you reappear and start saying, hey, the stock sucks because the stock price is going down and it must suck. That's just a dummy way to look at the world. If you think every stock is garbage because it goes way down, you'd never own anything because all stocks behave like this. No stocks make runs all the way up. I mean, Hood went from 150 and now it's back in the 80s. Is that because it's garbage? It's been a good business. It's because I think people realize how much cyclical risk and, how much risk there is in the company. And how they have basically one product line, which is trading and getting payment for order flow. And they're trying to call credit cards, some type of basis for a business. It's a fucking joke. Payment for order flow is not a durable competitive. I would argue it's a very shady business. And I know SoFi uses it too, as do all these others, but nothing is for free. They're taking your information and they're using it against you to take your money. I assure you. Who do you think's paying for all that? Because it doesn't cost these guys anything anyway. They know what you're going to do before you do it. That's why all these guys are like rich on Palantir and Hood and all these other, I hope you took profits. I mean, I was begging people to take profits on those stocks at the top. And you could turn it around on me and say, well, you should have taken profits on SoFi. And you're right. I mean, of course, if any of us knew in advance that these retracements would be, 40+% and not 20%, and it would last for months, we would do that. I mean, I always try to flip and dip. Dip, trip, flip, Fantasia. Yeah, don't be pissed off, Tortuga del Rio. You're a very handsome man. Glad you followed. B of A is complete garbage. I mean, they're analysts on this stock. I mean, they have an agenda, guys. These analysts, they're very few of them are actually doing work and models and being objective and taking an honest look at things. I mean, if they were, nobody would be modeling for 18% CAGR 5-year from last year. You just can't do it. Management's sandbagging all the time. They're always under promising and over delivering, which is really what you want. I know it upsets people like, oh, the guidance is tepid. You can't have everything. I mean, they're giving good, strong beats and raises, and then they still keep raising and beating for like what, 6 years in a row, 5-6 years in a row. How can you do that every quarter and continue to exceed expectations? And they go, well, it's just a bank. Just a bit. What? No other banks are growing deposits like this. No other banks are growing their lending segments like this. No other banks have these net interest margins. Like, look at B of A, look at their net interest margin compared to their whole, what they charge is like SoFi's net interest margin. This is a rich, rich, rich business taking the premium customers. And the business model is built to capitalize on that. And you see more being added to it, not just around the periphery, but at the core. Think about how much you get from business checking, business lending, business banking. You have millions of customers built in already who need those services. And if you're going to make SoFi one stop, I'd like to see the options improved. I'd like to see the investment. The investment is really good if you're just on straight kindergarten level, but a lot of people out there want just a little bit more. I'm not saying it should be, a full-fledged, options trading focused app. But I'm saying if you're going to be all things to all people, you have to give people choices and you have to give people real option strategy. Now that can come a year from now, whatever. It's obviously not, deterring 99% of people from buying and using and loving SoFi. The unaided brand recognition continues to march up toward 10%. They continue to spend less on advertising, less on customer acquisition. You tell me the trends that are bearish for this company, other than the price of the stock right now, which, think about things you can control. It's like people that take credit for their sports team winning. Hey, we won. I mean, I do that too, but it's not logical. You didn't do anything. If you're a SoFi bull, it's, only your good judgment was buying the stock that ran up. You didn't coach the team. You didn't play the game. And same if you're a bear, I just think taking credit for price action and like cheerleading it like you did something is, I don't know. It's a little bit weak, but I sold the fear last time. Luckily didn't lose money. I'm determined not to do it again. Heartbreaking to watch it go down though. Yeah, it is, Carl. It is. The reason it feels heartbreaking is because it feels unjust. We're a culture that likes to see, think about justice in the old West and all these things. It's kind of, it is what it is. I'm not saying there's not a, buttload of hypocrisy and qualifiers added onto that, but it's just, you feel that you're being, you feel that it's not fair. You feel that it's not right, but life isn't fair. Life isn't right. Life doesn't owe you anything. And this is how price action works. I feel like everybody was telling you to buy at 30 and 31 because they wanted you to buy because they want you to sell here and they want to buy those shares back here and make a ton of money. People saying, oh, Simply Wall Street going to 14, going lower than 14 because they're not executing. I don't see how any company could execute any better, quite frankly. Now, yes, I wish they had big mega banks joining Galileo and that revenue was just through the roof. And of course, but you can't have everything. I mean, you can't expect every business segment to absolutely be destroying, but the loan platform business cures everything. It makes up for everything. Financial services, same thing. So I was comfortable breaking my own rules in terms of allocating, too much of my portfolio to SoFi because I believe SoFi is that safe. You never get this much growth with this much safety, this much consistency, this much reassurance, conservative management that is consistently overperforming, over delivering. I mean, a lot of these guys, like, the guy Tanner interviewed, that curly headed, bullum headed freak math professor or whatever, who's saying, like, well, I don't believe anything for a year. Anybody can make it look good for a year. What about 5 years? What about 6 years? Once management does it for 10 years, he'll go, well, they don't have a 50-year track record, so they're shit. The company's only been around 6 years publicly. You can't ask for more than a 6-year track record. That's idiotic. It's idiotic. You'd never have a new business. You'd never have a new company. And the consistency of what they've been doing and the business model they've built that shows it's just getting started. The flywheel's just starting to work. Cross-selling is just starting to accelerate. Customer acquisition cost is just all the trends are in the right direction, and they're telling you the stock is worth, a third less than it was worth what they were telling you a few months ago because they're trolling you, they're gaslighting you, they're manipulating you, they're playing on your emotions. They want you to have that defeatist attitude where the price action affects you. Don't be a sheep. Don't be a sheep. It really is simple. It is. Buy low, sell high, or buy low and sell never. And let this portfolio build you wealth. Live off that wealth. Borrow money from your shares. You don't have to sell your shares. Don't pay capital gains tax. Live like rich people. Let your assets work for you. Don't worry about them. Don't work for them. Don't buy and sell. Don't jump in and out all the time. Be consistent. DCA quality winners. Not your bit miners, not your PayPals. Buy SoFi, buy Microsoft, buy some of these fallen angels. And I don't think this new PayPal CEO, frankly, I don't know if he's going to be able to turn that business around. There's a lot of bloat there. There's a lot of baggage. I still think that the stock was undervalued, and their earnings. I haven't had a chance to go over it in detail yet, but I just don't want to buy this dip. I think you've got more downside ahead. So I would definitely let you know if and when I will be buying PayPal, but it's just not right yet. I want to hear the plan because we got one turnaround plan that didn't turn. So what comes next? It's an interesting question, but it's right now that it's just too much negative sentiment around the stock, for me to buy that dip. Yeah, that's true. Our family, they do have gambling. Let's see. I had that money. I hate the notion of house money. That's my money, and I choose to leave it in. So there you go. I mean, you're right. I hear you. I know where you're coming from, guys, and I know nobody likes to see their stock go down from 32 to 22 or whatever. It just sucks. It's painful. It's painful, but if you have to be able to fight through that emotion, not let it affect you, not be defeated where you're going to dump the bottom. Selling the dip and smelling the rip is what keeps us poor and keeps them rich. We keep playing their game. We keep bow down when we go to their town. Bow down to a trader that's greater than you. Credo, Jay Ajay likes Credo. Frank the Tank is so broke. I kind of am too. No, PayPal will die. I can't buy anymore to TCA. Yeah, Frank, I bought a bunch more, but I had to sell some other stuff. And quite frankly, if they take this thing down below 20, I might do something completely idiotic, like dip into lines of credit to buy shares, stuff like that. Yeah, SoFi Bulls, let's go. Let's see. Is Alberto Bertie Alvarez in the house? Deuce Kabuski? Haha, Alberto. What's going on, Alberto? Been seeing Alberto's channel. He's like taking family videos and stuff. What's going on? Hope you've been doing good, man. Oh yeah, I don't know, man. I don't think we're gonna have no elections anymore, guys. It's it's all gonna be federalized. Oh yeah. Sorry, guys. Couple things going on, but yeah, great to see you. Great to see you again, Alberto. Welcome back. Hope we see your fictitious nephew pretty soon. Yeah, man, it's a very smart thing to do is just do something like real life instead of spending your time doing Pokemon. This show's so dumb, guys. But no, it's great to see you, Alberto. Hope you've been doing well, riding the Harley, keeping the goatee fresh. What's going on? The great Michael Wellner. I have cash secured put at 20 on the weeklies, February 27. Let's see what happens, Michael. Um, SoFi loan, yeah, their money costs too much. I can get money much cheaper than that, Jordy. I can get lines of credit against my stock portfolio, like, you know, I don't know what it is right now, 6% or something. So SoFi's is way too expensive and their margin is ridiculous. So fuck going on in here, Fireman Pete? I don't know. There are no beautiful Puerto Rican women, and as far as I know, nobody's on fire, but it's a big it's a big sword fight in here. And we're all mopey. We're all mopey dick because SoFi's been getting absolutely shat upon. But if you see, guys, what happened at the end, I mean, you see in a lot of accumulation, and I would guess, this is just my guess, that there's a lot of green candles in here, that there was a lot of buying in this dip. There's a lot of covering. I don't know. Let's get a check of the short interest here, guys, just for shits and giggles. Let's see what else they have. Any filings today? SoFi's plunging stock is an amazing buying opportunity. I would completely agree with that. Palantir stock surges after Q4 beat. PayPal plunges. SoFi stock slides despite analyst upgrade. Momentum in the business is undeniable. But anyway, let's look at what happened today in terms of shorting. So it's a little bit of return shares return today. As short is standing at about 9%. Cost to borrow minimum was down again negative. So some lenders are paying people to short the SoFi stock. So this is, guys, I mean, and another thing, not for nothing, but look at the downtrend here. I mean, I know I have a tinfoil hat and they call me Crisco because I'm a little fat in the can. But if you look at this trend line, guys, I mean, this is a straight walk down from here. It's way too perfect. I mean, the slope could be probably a little bit more in that area, like right there. And, the downtrend is defined by the highs, uptrend is defined by the lows, and that is a well defined downtrend. So they were going to walk this thing down no matter what. I keep saying that. It's like, well, it can't sell off. The ER was too good. It can do whatever market makers want it to do. They control everything. We control nothing. You have to be long term. You have to be fundamental. You have to be disciplined. You have to be able to tune out the haters that say, hey, the company's garbage because the stock price went down. Those are know nothing buffoons that want you to dump at the lows and lose all your money year after year after year. Do you really believe this is a $20 stock that after being a $10, buying a SPAC is like buying a lottery ticket? Most of them turn to absolute shit. The Hylians, the I don't know, a million of them I bought. Microvast, PaySafe. I bought PaySafe. That's how stupid I am. Like, why don't you charge for this show? Why don't you have a Patreon? Because I'm an idiot. I feel bad just that you have to watch it for free. I should be paying you guys. At least giving you guys free donuts. Tickling your balls a little bit. Lifting with Joe Rogan, something in the basement. You know what I mean? Know what I mean? Reading a men's fitness magazine, just working on my candy cane, purple and pink spandex bulge poses so that I can get the outline of my wing into a wide angle lens as quickly as possible. Why does every men's fitness magazine just feature some dude hanging dong in an ultra thin spandex that are purple and pink striped? Seems a little bit questionable. How does seeing a penis help me work on my abs? Riddle me this, men's fitness. Thank you, Scott. I appreciate that. I enjoy your comments. I should be eating kale. Katie, you want to be my personal chef? Yeah, I know I should. I don't eat any donuts actually. I just eat way too much like other stuff. Rice, meat, tacos, burritos, Korean barbecue, sushi, hot pot, Chinese food, ramen. It's a great Pakistani place. Oh my God, the place was good. My stomach hasn't been right for like 3 days though. Best naan I ever had. Oh my gosh. Like garlic and herbs on it. Thought I died and went to heaven. Know what I mean? Know what I mean? SMCI +8 after hours. Oh, nice. Love to hear that. They really hit it today though. So this is what I mean when I say they manipulate the starting line so they can manipulate the finish line. Like they push that thing so far down that even an 8% pop, like that's what they do because they want this thing in the low 30s. I mean, where was this ER? I have so much SMCI, I have so much SMCX. It's absolutely ridiculous. Oh my gosh. Oh my gosh. 70 cents EPS. Wow. Wow. Oh my gosh. This is good. This should go up. This stock should be at 40 tomorrow. I mean, that's a huge, huge beat. Wowzers. That is freaking huge. Oh, I have so much SMCX. I'm an idiot. I bought more today, but it's been going down so much. Like even if with a huge pop, I'll still have my gick in my hand, nothing else. But I am all titers. I'm no meat. I'm all titers. Know what I mean? Know what I mean? Oh my god, dude. Oh my god. 12.7 billion in top line revenue. Wow. Coming off of 5 billion. Now gross margin 6.3%. That is pretty bad. I'll give you that. But look at that run rate. Now I know they're not going to have those big projects hit, every single quarter. But guys, that's a $50 billion run rate that quarter. So you're talking about a company that was doing less than 5 billion in sales just a couple years ago. I don't know if I've ever seen top line growth like this. Now, granted, the margin pressure is problematic, but this business will normalize at margins that people can live with. I don't think they're going to be able to live with 6.3% gross margins, but they're doing what they have to do right now to book the mega projects. This is phenomenal. This is even better than I expected. I was thinking 12 billion was going to be the best case. 12.7 is silly. Silly. A silly little freak. No, they were supposed to announce today. I don't think it's fake at all. They put it out over the wire. Something they just might not get it up on the investor relations page instantly, but oh, sorry guys, I'm looking for new drones. I love drones, by the way. Wait, what the hell just happened? I don't know what the hell just happened. SMCI should start trending. That's crazy. That's a crazy beat. Now I know that margin is problematic. I'm not saying that's good, but no, this is not a fake. This is on the business wire. Yeah, so they put the wire and they'll get everything loaded up on their website, but that takes a little bit of time and they can't put it up early. So net income was 401 million versus 168 million. And wow. Quarter on quarter net income going up 2.5 times. That's pretty amazing. And even year on year, they're up. Non-GAAP gross margin 6.4 versus 12. Now that's tough. Um, but you know, the top line, the bottom line, this is a massive beat. I got to go over this, guys, and then I'll try to do an SMCI video, but I got to do a bunch of other work. So I don't know. The only thing I could say on SoFi is if you look at their last two ERs and you look at the trends and you look at how badly these models are broken that say what this stock is worth, and even then, you know, even then, the analysts have 20% upside on the stock. And that's with these crazy Ivan calls coming in from, Midwest Values. He bolted on his head to give another, $18 in a sell rating. How do you not change, your thinking on a stock when you see evidence in front of your face that your assumptions are completely wrong? Where's the five head saying, hey, I was completely wrong in everything I said about credit quality deterioration, about everything, about fair value accounting? Why aren't all those fair value accounting people coming out and saying, I was wrong? There's now a 5-year history. If there was any issue like that on the back end, in fact, their loans become more and more valuable vis-a-vis the competition because they have the best borrowers. That's not going to change. It's a real competitive advantage. It doesn't just evaporate because times get tough. You're like, well, SoFi is going to get hit like anybody. Actually, SoFi is going to get hit a lot less than others because they have better quality borrowers. They have far more stringent underwriting. That's why they lay off loans to lesser dog shit companies that shouldn't even be holding Anthony Noto's jockstrap. Adjusted EBITDA, motherfuckers. Dude, I mean, if Palantir turned in an ER as good as SoFi's, like, Captain Morgan, or what's his name? Alex Karp, he would just drop the mic and go, we're not even going to do ERs anymore. Just give me $1 trillion. And I mean, I know Palantir had another good ER and stuff, but I'm saying Noto is humble. Noto's the guy you want. Noto's the quiet assassin in the corner. He's the Dexter. He's what's his name from Grosse Point Blank. What's that guy's name? John Cusack. Super pale. Guy looks like a vampire. So pale with that jet black hair. Just absurdly pale. If John Cusack was in Ferris Bueller's Day Off, do you think it would have been a good movie, a better movie, a worse movie? What do you think? I kind of think you could take out Matthew Broderick and just plug in John Cusack and just not miss a beat. They're both little cutesy tootsy, little quick one-liner, step on your nuts type of situation. Oh, the great J Money. Let me get some water, guys. Anyway, yeah, that was pretty much just what I wanted to talk about was the fact I made a giant SoFi buy today. Um, I had a lot more shares than that from 5, so it's not a huge increase in my SoFi position, but it did jump SoFi into my number one stock holding. I've been trimming some Tesla, I've been trimming a little bit of Google, been trimmed some gold, trimmed some silver there off the top. Thank goodness I don't have that much crypto exposure, but you know, it's tough to tell who to listen to. You have to go to the fundamentals because we can't control the price action, but you also have to look at in a down market, in a choppy market, in a lot of risk, a lot of uncertainty, geopolitically, you have to go to safety. You have to go to consistency. And that's why I'm so comfortable buying stocks like Microsoft and SoFi that turn in, I think, really, really strong ERs and just get absolutely crushed. But I do have to amend my B plus to an A. I don't know what else management can do. I don't know what else management can do. This is not bank growth. This is tech growth. And I think the eventual margins will be a hell of a lot better than 20% at the bottom line. I think you could see those margins get up into the 30s quite easily because this is going to operate like a tech company. The fixed costs are done. The marginal costs are minimal. The incremental margins are going to be absolutely off the charts. And so is the revenue growth. And those two things combined make this company, I think, 50% more valuable than current models indicate. Because I don't think CAGR for the 5 years starting last year is going to be 18. I think it's going to be 30 plus. Could be 35. Oh, good for you, Keen's Tam. You're hanging in there. Keen's Tam is a guy. I hope I'm saying your name right. Keenstam, Keynes Nestem. I don't know. Guy's got a huge set of balls on him, though. That's all I know. It's not going the trends. Dub Raduti, are you listening to SMCI call? He's Canadian. I am not Canadian. I wish I was. Be much, much richer. I'd have Tevis money. Have some of that Tevis money. Every single Canadian gets $1 from Tevis. I think he's more rich than that Robert Hershkovich guy, or even Mr. Wonderful. See, it's great. We got the great Nod Lurker, an example of a handsome bald man versus the great Mr. Wonderful. I can't stand that guy, Kevin O'Leary. And no, it's not because he's a big Trump guy. I like plenty of the Trump guys. This is personality. I'm not policy. I don't hate people because they disagree with me on policy or politics, anything like that. And I'm actually not a Trump hater. My derangement syndrome is totally under control. It's just a little extreme. Can you do a 5? Oh, I was doing a 3. Can you do a 2? Not right now. Noto has been a little bit more exciting. He's like watching paint dry. Yeah. I agree with you, Alberto, but I kind of like it because I'm going to be here for 10 years, God willing, unless I have a massive infarction. So I don't need him cheerleading and selling now. I was fine accumulating a ton more shares today. I didn't necessarily want to, but you got to take what they give you. If a guy, throws you a low fastball outside, you don't try to pull this home run. You slap the ball, into right field for a base hit. You've got to take what they give you. We can't drive the bus. We're only passengers. We only decide when we get on and get off the bus. If we start worrying about, oh, it broke down, oh, it went backwards, oh, we don't like the route, we're going to get impatient, which is our number one enemy. We're going to start caring. We're going to start feeling sorry for ourselves, and we're going to make bad decisions. Look at the fundamentals. Look at the ER. Don't listen to the rhetoric. Why was the entire financial media trying to get you in at 30, and now why do they all want you to dump at 20? Because they want to skin you alive and take your money and leave you with nothing and drive your women and children out into a cold prairie. You guys want to hear a Kevin Costner impression? I'm fond of you, Sue. Oh, man, I can't stand myself, guys. I'm a lawyer. Thinking about doing the SoFi rock opera just in solidarity with the stock. But it's just so embarrassing because I can't sing. And I'm fat. Got a lot of other bad personality traits too. I came, I saw, I had anxiety, I left. Oh, I'm a hopeless turd, guys. Dude, ass face is buying. That's good enough for me. Mark, hope we get a huge move on SMC. This should be, Mark, I don't think they can step on this. I don't think they can step on this. That's too much revenue. See, and once you take the market share, you're not going to give up the market share. You're going to be working with these hyperscalers. I mean, they're going to work with you over and over again because you deliver, and that margin will creep up a bit over time. You can't put yourself out of business taking on more business, but even at those low margins, that growth is silly, sick, stupid growth. And I don't think there's any way they can spin that. Accounting difficulties. Got your accounting difficulties right here. I'll bend over so you can hear me. I mean, this should go up at least 20%, if not 30. because it's just been suppressed with the blood. And I know, again, there's gonna be a bearish narrative that the margins broke down too far, but EPS doesn't lie, guys. What other company can actually make a profit growing at this pace? And they're setting themselves up for the future. They're investing in the future. I know there's still a big short on this one, guys. Shorts are going to be all over it. Let's see what the SMCI short is actually, because I'm curious. Should I actually do an SMCI video? Does anybody want to watch another, fat guy ramble for another hour? Probably not. Let's see. So yeah, they were shorting again today, 18%. Cost to borrow, min negative. So they're paying people to short. This is this is the ultimate project stock. SoFi is quite a project stock, but this is the ultimate project stock. They take it up and down like an EKG to manipulate you tiny wing, weak-handed bastards into selling the dip and smelling the rip. Wait, Sue, the doctor is your brother, not your husband? It's amazing how people just become huge stars. I don't know. I mean, I love Ben Affleck as much as the next guy. Fred Savage. Donatello from the Teenage Mutant Ninja Turtles. All very talented. Thanks, Carl. Yeah, it's pretty good. Yeah, Mr. Wonderful. He's a smart guy, and I know he made a lot of money and stuff, but what an asshole. You don't have to be an asshole, Life's a lot more fun when you're not an asshole. Try it. You uptight, self-important piece of shit. Put on a bunch of foundation and try to tell me about my life. Fuck you. Fuck you. Dude, Costner's the best. I like Field of Dreams, but even the acting there was like, it's so like, it worked, it worked, but I don't know. Dude, Oscar, Field of, and what was that news? Like the guy from The Star, the Native American guy from, what was that movie? Last of the Unwatchable, Silence of Forever. He just got convicted of a bunch of rapes. I read some article about that. Wow, it's huge problems in Native American reservations and stuff. Like women just like disappear. It's not a lot of women's equality and rights has shown up. Women just disappear, and whatever happens, human trafficking, and like nobody really pays that much attention to it. If you really want to go after like human trafficking and stuff, there's plenty of it going on in this country. Just got to know where to look, actually fucking do something about it, allocate some goddamn resources to it. What do I think the bottom is as far as SoFi? Well, that's a great question. Let's see where we are at right now. We are closing right about here. Let's see. I mean, this is what I said last time. There's a lot of support right here from, where you made this little market for about a month. That's as much as you have on this chart right now. Found support there here. You see that candle. I mean, that was a low of 21.21. And today you had a low of 21.02. So bulls actually did step in a little bit and defend 21. I mean, they were trying to defend 22, but bulls are weak sauce douchebags, so no bankroll. I mean, why? And if you're a bull, an institutional bull, and you want to accumulate more shares, why are you going to step in and prop up the price when you can buy shares from retail lower later? It's only if retail grows a pair of balls and has a spine that this stuff doesn't work. And of course, that's never going to happen because just the nature of retail is they can be pushed around. But you saw how this is like 25 looked really, really good on this chart. I mean, there were buyers just rushing in at 25 every time it went down there. I mean, you see these dips, here, here, here. I mean, that was actually a pump and dump. But this was a pretty rough fall from 25 to 21. And they had this thing dialed in on earnings. This was going to happen no matter what because earnings are an A. And this is responding as if they were like a D or a C, perhaps. D earnings, you just go to zero these days. You have absolutely no hope. But I know, bears are going to spin this SMCI print, but okay, you can attack the margins, but when you're taking market share that fast, I think those margins with this profitability are absolutely fine because if your gross margin is in the sixes and you make this much profit, your cost controls are absolutely phenomenal that you're still able to take this much money to the bottom line on those margins. So I think they can get those margins up. I think this stock should go up at least to the mid 30s tomorrow. I don't think it's necessarily going to do that, but it should. I mean, they're going to step on it. They're going to do everything humanly possible. But I want to go over the guidance. I really want to see what these projects were. I got to go over the ER. So I don't want to make any snap judgments. I did that with SoFi under a, sleep deprived state and just didn't work out that well. What's going on, Billy Jack? Sold 5K shares of Palantir and swapped for 8K shares of Hood, 1K shares of New, and 5 ounces of silver. There you go. Yeah, Hood has pulled back a hell of a lot, and their results have been very, very good. So until those results fall apart, I'm not mad at you, but I just don't know. I don't know if they can hold up if crypto continues to go down. They get margin calls. I just think their revenues are going to be under pressure, and I think that's going to hit their margins. But we'll have to see. I'm going to go all in on 22 puts tomorrow if I can get $1 premium. Yeah, I mean, that's beautiful, Birdie. I think you're really onto something there. But yeah, guys, I appreciate you watching. That's about all I have for you. Made a huge SoFi buy today. I just think this is what you look for. You look for the divergence in the fundamentals, the results. You say the results are an A plus, and the market is treating the results as if they're a D. And that just screams opportunity. It screams opportunity. When opportunity knocks, you were probably asleep. And that's why you're a broke loser. But anyway, I appreciate you watching. Thanks. Peace. I'm out. Thanks, Jay Money. Thanks, Birdie. Great to see you again, buddy. Appreciate it.